Hello guys, this is Trader Brown here. Again, we're on the new week, week 33. Now, last week has been very interesting. GU and Euro USD, especially Euro USD, has been in consolidation for a long time. So we're going to look at that in a moment. But this is GU on my chart and the daily time frame. So the question is, what is the market doing right now? What are we expecting to do with this market this coming week, this very week, starting from tonight as the market open? Now, there are a few things I have developed over the years as a trader, and it has helped me to understand the technical aspect of this pair, especially the one I do every week. Now, I've been able to come to an understanding that the market has a way of moving at every economic season. Now, this period is a very difficult time in the market, especially in most countries where we trade the major pairs. Now, election is coming in the United States. You need to pay attention to the election that is coming in the United States. And also, we just finished election on with the British colony, the Great Britain. They just did an election, and a new leader has just been elected, which is the new Prime Minister that is on board now, Keir Starmer. And also, we can tell that there are a lot of riots going on right now against immigration, immigrants, and all of that going on in the country, and all of those things put together. There are a lot of things going on. So, um, we are having a very challenging time in the market. Okay, but nevertheless, as a trader, you still have the opportunity to uh make money and look for trade opportunities as the market display uh the economic reports. And also, if you don't trade the news, you can always use it for your advantage to look at what the next movement will be. So right now, this is the daily time frame on GDP USD. And if you go to the weekly quickly, you notice that we are bullish on the weekly candle. Uh, we're looking very partially bullish, although it's not that strong as we expect if you zoom out. But the fact that we have few structures broken and there's this minor consolidation going on in the chart on the chart. So we're looking at this recent movement that the market has done. So we can literally say that there is a minor break of structure here that we can look at to the upside that makes us to feel okay. This could be the next opportunity. The up here will be the next opportunity that the market will break, and the next price level that the market will break for us to look for more buys. But this is weekly candle. It takes a lot of moves. So let's go to the daily quickly and just do this. Now on the daily, haven't marked that high. This is the recent high we're looking at on the daily as well. We're looking at this high area here on the daily, and that's the weekly high, that's the daily high. So right now, price is bullish on the daily. We have breakup structures to the upside, as you can see to the left. So price has given us several breakup structures, as you can see all around this area. So price just rally up and then came back down, created this stop here through this price action, and then it's retaliating back up. I expect price to go back up. That's my anticipation. That's my expectation. I'm expecting price to go back up to as far as hitting this previous high. Now, the point is, how do you trade this? Now, as you can see the candlesticks, the way the candlestick is behaving, you have a red candle and a green candle, red candle, green candle, red candle, green candle. So we have two multiple red candle here. 1, 2 red candle after green candle, and then another indecision candle. A whole day there was indecision, and then price move again with the bullish candle and the bullish candle. Now the question is, are we expecting another red candle? Now the problem is with this kind of candlestick formation is that you don't know whether the market is trending or not because it's not trending. This is a retracement. That's one thing you should know about trading. If you check, this is the impulsive move to the upside. Okay, this is the impulsive move to the upside, and price eventually traded into this area. Now, this is retracement. Overall, this is an impulsive move. Until we break this low, there is no break of structure. We are not thinking about actually looking at a downtrend until this low is broken here. We are not looking for downtrend trade at all. We have to wait for a break of structure. So this low needs to be marked to understand that we are now looking for a push up. You may consider this as a structure, but I tell you what, this is not a structure to consider the board because it's all about retracement. Okay, it's all about retracement over here. So it's all about retracement that you say. So the first thing is, what are we going to expect? Now, here's how you're going to look at the trade to trade it starting from tomorrow. Now, this is one of the things you want to pay attention to. I will go to the 4-hour time frame to show you more into this, but let me show you first on the 4-hour so you see what's going on. On the 4-hour, we just have a break of structure to the upside. Hold on a minute. I think I removed it from the hours. Quickly, daily, minute. Okay. Now, just to be sure we had that done. Good. Now we have price break this minor structure that happened here and created a double bottom. So as long as price has created a double bottom, what we're expecting is that price will rally up, which it did, break of structure, pullback, and we are anticipating that the market will break this high because of the liquidity that is there. So I'm anticipating that price will come up to that high and break that high. Now, this is what you're going to do. The first thing is you will have to go back to the daily and then create the price close. You see the daily price close. This is where price close on this daily candle. Put that line there as I'm doing it now, doing the chart. What you want to see is that you want price to trade above it to confirm a buy. Now, a buy in the sense that price is moving up. So you're going to go to a 1-hour time frame also to watch it. As you can see, price already trading up. So what you want to see on the 1-hour time frame is a break of this high. If price take out that high, then go to a lower time frame to trade to the upside because it's going to do that, come back to retest it, and then you can continue buy. Now, this is very important to know because this high here, okay, is liquidity. Price is sitting there. You see liquidity area. So expect that price is going to splash through that area and you're going to be targeting this high in the week, this week to come. So we're expecting price to push higher to that level. But you must anticipate this break of structure, this area here, where price consolidates and creates liquidity. We need price to take out that liquidity and pull back into this area, and then we'll continue to the upside. That will confirm our price. Remember, daily price opening, closing, that price is not trading. So we are bullish. So, when bullish candle build upon on top of each other, it means there's a trend. Do you understand what I mean? So look at this candle here. Let me show you something over here. Look at this candle here. You see when it was bullish candle, price closed. And price closed and traded low before going up. That's how candle formation is. Look at the bearish candle. When price is bearish, look at this bearish candle here. Price closed. What did it do? Traded up and then before heading down for the day. So expect that to happen. There will be a little push up, maybe a drop a little bit, and then price will push up back up. But watch this. When you're going to buy is when price break above the opening price of the day. So I'm anticipating overall on GU a bullish momentum. I'm still anticipating that price will go bullish on GU, breaking this high, taking that liquidity retest and continue to the upside. I'm anticipating that to happen. If not, then we should be expecting that price will break this low, or first thing is to anticipate that price break this low. You want to see that price break this low first and then give you a retest, and then we should be targeting this low and also this low. But at the moment, I doubt that is a sell market until we see what price do within this range. So that's my take on this pair. That is GBP Now, SP500. If you look at SP500, let me just remove the drawing. On the daily, we are now beginning to rise because the market has been very bullish for a while and it broke structure. So we have that price taking our liquidity here. This is liquidity graph over here. So SP500 is a bullish market overall. You don't want to stare this kind of market. You have to be very careful while selling it, except you know your strategy permits you to do it. But at the moment, we're going bullish. So the first thing is, what if we are looking at structure break here? Well, like I said, the strategy that you are going to implement is very simple. Obviously, there's a gap here that has been filled already. So two things involve. Either price, you want to draw, this is SP500, okay? This is US 500. So we're looking at this area here, okay? So this is daily, okay? Looking at this area on the daily, right? What you want to see is that price break above this area and trade above this high before you look for more focus on buying. If this next candle open, the daily candle open and close, above this high and retest, then you should target buying overall. That's very important because it's in a very tight position in the market right now. Because if you choose to see it as a trend, a downtrend market like this, the downtrend, then you should expect price to reject at 61. So if the price doesn't reject at 61 and it breaks through, then look for buy. But if it rejects at 61 and then create a bearish candle on the 4-hour time frame, as you look at it, because you're going to be looking at it, if you create a bearish rejection candle on the 4-hour candlestick, then look for a sell. Look for a sell, but be careful because of this area here. You look for a sell, ensure you take your TP at the last low, and then watch what the market will do. But on the 4-hour right now, I can anticipate that there's a break of structure forming. And if price would take out liquidity, which is here, then what I anticipate is that there will be a push up and a pullback and a continuation. So if this 61 doesn't hold, then it's going to take a momentum to the upside. So watch out for that. And that's what I will expect you to focus on in trading this pair because it's ever bullish. SP500 is ever bullish. So trading it to sell it, obviously you have to be very careful. So this is my take on this pair. So watch out for this. This is my analysis for this. Now, Euro USD. Let's go to the daily time frame on Euro USD quickly. If you look at the daily time frame on Euro, like we said, we've been having this massive consolidation until recently, a few days ago, that market pushed up. But for the last 1 week, we have Monday. This was Monday. There was a push up to take out liquidity on the high, and then all through the market started consolidating again. So we have Monday, Tuesday, Wednesday, like those are consolidation candles, and it doesn't really give us a good opportunity to expect trade on Euro USD at the moment. But guess what? price rejected at this level, which I want you to focus on here. You see this area here, price rejected there. So this might obviously be another opportunity to sell Euro USD. But if you're going to sell it, I would like you to go to the 4-hour time frame and look at reasonable structure first before, okay, good. There is a structure break on the 4-hour, as you can see. So right now we have a break of structure. This is what the market did. Market dropped, all right, pull back and then drop again. Now a pullback. So this is what you should expect. Is it going to drop now? If it's going to drop, where is it going? So the first thing you want to look at is this area of price action, especially in the first place is this area. You want to look at this key level here where price came to and expect reactions. That's number one. Number two, you can equally draw your using your fib because this is a massive push up to the upside. So we use your fib. You see the 61 aligning with that price action. I marked that area of consolidation, that psychological level. So again, that is another area you might sell to because if you set to that place, this is Euro USD, you set to that place, expect price to rally up. So because all of these are retracement, okay? They are all retracement to the downside. So watch out for a break of that trend line. And if it does, go to a lower time frame like 5 minutes or 10 minutes or 15 minutes time frame, find an entry and jump into that trade and sell to where you have this Fibonacci retracement of 61 or this price action level, 4-hour time frame. Mark it out. Should be able to know where your TP area is if it's sell because I can imagine it's going to sell some. So because it's selling the retracement anyway, remember this is just retracement to the downside. So all this imbalance will have to be filled to a certain level, which worst case scenario is 6 to 1. So let's assume that happens. And then you want price to rally up again. So that's what I'm expecting on this pairs. Hopefully they play out the way I anticipate, but I'm going to be trading GU and also SP500 for the week. I'm not going to be trading Euro USD, although it looks a little bit enticing, but I'm going to just keep out of it. I'm going to focus on GU and SP500 for the week. So guys, that is all I have to say. If you're new to our channel, hit the subscribe button, hit the like button, share the video. Listen, you have all the information you need to get in touch with me. If you need any help, any support, listen, the link is in the description on this video. I'll see you guys in week 34. Enjoy trading the week and pick up the pips. Bye for now, guys.